But let's check in on Coinbase. It's down. Shares are down for COIN by about 25% pre-market here. The stock solidly in the red after the company reported a year-over-year Q1 revenue drop of 27% and a net loss of $438 million. And particularly looking through this report, even as we're seeing the shares continue to move lower over the past year, down 75%. And if you go even back further to the point when this company went public, of course, we remember their shares opened at about, $381, and they touched $420, $430 before dropping back. And then we've seen this precipitous decline, but particularly in this Q1, the transaction revenue, that declined 56%. It really points back to the volatility that we've seen within the crypto segment more largely as well, impacting them squarely on right now.
What planet is Coinbase on? At the top of their earnings release, they're pointing to something they put in their prospectus on when they went public, warning investors of potential volatility in cryptocurrencies. I mean, you listen to this conference call, you think Bitcoin prices were over $100,000 and they were just dominating the NFT marketplace. This is a bad quarter from Coinbase, a bad earnings call for the company. No sense this is a tech company like a Robinhood that is going to be out there cutting expenses anytime soon when they probably should, maybe not as aggressively as Robinhood, but still they have to do something given the growth is slowing down. No signs are cutting expenses. They did get asked about a potential merger with Robinhood on that earnings call, which was fascinating as well. But look, the bigger problem here now is, and we have a story on this on the Yahoo Finance homepage, there's concerns about liquidity problems at Coinbase. Now, the CEO, Brian Armstrong, tried to tamp down these concerns in a pretty long tweet thread after the earnings call, but still, to hear notes from the likes of Mark Palmer at BTIG this morning talk about liquidity problems, potential insolvency, if this is in fact a crypto winter, is a major problem.
But Mark Palmer is positive.
He left to buy.
He's positive on the stock. No, I think that tweet thread was actually fundamentally misunderstood. If you think that he was raising the specter of bankruptcy, what he was saying is that they had made a mistake in their filing where because they are a custodian of people's cryptocurrencies, they have to lay out worst case scenarios, including a potential bankruptcy, black swans, as he called it, I believe, in that thread. So what he's saying is, here's our plan. We're not going bankrupt, but if we were, we are required by regulators to lay out the plan. So I actually don't necessarily think that that is cause for alarm in and of itself. So that I just wanted to say that off the jump here. But other than that, there's a lot of causes for alarm. And one of them is the slowing number of users. You talked about the transaction volume, right, but monthly transacting users fell to 9.2 million. 9.5 million was estimated. Not only that, the CFO, Alicia Haas, on the call saying in April, the monthly transacting users were around 8.9 million. And the company says they're expected to be down in the second quarter from the first quarter. So you got a problem when you don't have as many people using the platform. And CEO Brian Armstrong tried to offset this on the call by saying, well, we're getting them to not just trade crypto. They're doing other things on the platform. They want to be more of a well-rounded financial services product. But
not stocks, though. They pushed back hard on that
against
Robinhood.
That Robinhood. He said we are a crypto-native company. Exactly.
Well, and for those long bets, that's where they had started to talk about all these major investments that they are making. People at this point, investors, analysts especially, don't necessarily want to hear about what the future of Coinbase may look like in 3 to 5 years from now because of an NFT marketplace that you're bringing to the broader landscape. The bread and butter, and I know we talk about this all the time, but when we think about how Coinbase is going to make revenue right now, it's on more transactions, it's on more custodial services. I believe they took a little bit of a hit on the number of people who were staking as well and earning rewards from how much of their coins and a percentage of their coins that they're willing to pass back over for the blockchains to be able to then validate themselves and the transactions. And so with all of those things being an interim headwind for them, that's going to continue to, in this near term, impact the financials that they rely on to invest back in the business.
And it's certainly affecting the shares also. We got to talk about another big cryptocurrency story that we're watching. Bitcoin isn't the only crypto that is struggling this week. There's a stable coin called Terra that is dropping well below its intended dollar peg. It has lost more than 50% of its value. And so Terra is one of a crop of these so-called stablecoins. They are supposed to be effectively an alternative to the U.S. dollar. They're pegged to the dollar. The difference with Terra is that while other of the stable coins, including the largest ones like Tether, like US dollar coin, as you can see there, they are backed by other types of assets. This is an algorithmically backed coin, which, full disclosure, I don't entirely understand. Maybe I don't understand it at all. But the point is that something has gone wrong here, and we have seen someone exit this coin in size, which has caused it to fall well below the dollar peg. And Do Kwon, who created the coin, tweeting this morning about things he's going to try to do. They have reserves in a foundation that backs this thing. They've been trying to back it up with those reserves, but I don't know.
Well, the entire thing, too, the algorithmic stablecoins, and they've been under high scrutiny as well. I mean, we've heard a lot of commentary from even the House Financial Services Committee that's held their own hearings around stablecoin. It looked like they were going to make some moves on that over the course of this year, have already started to put together language around it. But increasingly, even from SEC Chair Gary Gensler, stablecoins and algorithmic stablecoins specifically receive the highest scrutiny because there's a certain part of manipulation that needs to take place in order to ensure that you're still pegged against the value of the dollar or tracking against the value of the dollar. And so that's where you have a Luna that enters into the conversation, and the amounts that they're able to either produce or exterminate and kind of modify how much is in the market of Luna, peg that to the stablecoin Terra USD. That's exactly where, if you see a sell-off in Luna and people who are not staking as much or who are liquidating their positions, then that in turn directly affects their stablecoin, the algorithmic stablecoin of UST as well.
By the way, you mentioned the House Financial Services Committee, and Secretary of the Treasury Janet Yellen acknowledged the coin's drop in a Senate hearing yesterday as well. Here's what she said about it.
There was a report just this morning in the Wall Street Journal that a stable coin known as Terra USD experienced a run and had declined in value. And, I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need a framework that's appropriate.
So risks to financial stability is what she said there, and said that we could need legislation this year. One quick thing, why is all of this important? There is already concern about cryptocurrencies writ large, their stability, their reliability. And so when something like this happens, you have to think that there is a feedback loop within the crypto system that is already under sentimental threat, if not fundamental threat. And this can't help matters.
Yeah, my instant reaction, here comes another bad quarter for Coinbase. The lack of trust, bad quarter for Coinbase, going to impact volumes. That's how you tie it all together here.
I like it.